my favorite, identifying stop is good business model, poor management team, change of management team happens.
Mm,
And if you like the guy,
mm.
if you like the management team, new management team, you can create massive wealth. Like whole Tata Group, according to me, post Mr. Chandrasekhar has come in, is going through
Yep.
that whole big shift. I mean, Tata Group we knew existed forever, right? But
Yeah.
what has happened in last 3 4 years is unbelievable.
Hello, listeners. My name is Raj Singhal, and welcome to another episode of Breaking Investment Stereotypes. Here we deconstruct world class investors or wealth managers and deep dive into their investing journey, professionally, personally, or both. This episode is brought to you by Multipie.co, where we believe that investing is an ignored life skill. Our mission is to create a platform where people can find fellow investors, discover investing products, and share investing ideas. We have now gone live, and thousands of users are already part of a vibrant community. So do check out our app, which is there both on Apple Store and Play Store, or simply just sign up on web. I want to give a little guidance on how to use the shows. None of the following should be taken as an investment advice. Please see multiply.co/disclosures for more information.
My guest for today is Vikas Khemani. Vikas is founder and CEO of Carnelian Asset Management. He has 25 years of capital market experience before founding Carnelian. He was CEO of Edelweiss Securities Limited, where he spent 17 years incubating and building several businesses to leadership position, including institutional equity and equity research. He enjoys strong relationship with corporate India and is associated with several industry bodies and committees, including the CII National Council on Corporate Governance, FICCI Capital Market Committee, Executive Council of Bombay Management Association. He's also a member of a Young Presidents Organization, or YPO as it is commonly known, which is a global forum for entrepreneurs and CEOs, and was awarded a Young Professional Achiever Award for the service sector by the ICAI in 2014. His passion for investing took shape during his college days and continues to drive him. Besides being an avid reader and poker player, Vikas enjoys yoga, meditation, and has been running marathon since the last 15 years. So without further ado, please welcome Vikas Khemani. Hi, Vikas. Welcome to the show.
Thank you, Raj. Hi, lovely. Look forward to chatting with you.
Thank you. No, so I want to first of all congratulate you on your successful trek to the Everest Base Camp. Very exciting, something part of my bucket list for sure. I don't know whether it was part of your bucket list for long or not. Please, why don't you share your experience with us?
So yeah, it was a very very good experience. As you know that I've been running marathons for a long time, and in one of couple of years ago, one of the conversations with my friend said, "अरे कुछ और करते हैं," and something
Yeah,
else just try. And I like being part of the nature in the mountains.
yeah,
Always kind of like that. And 2 months ago, generally we were sitting and say, somebody is organizing EBC, so let's explore. Why don't we go? And as we explored, it looked like that, the only time you can go is before May. After that, it becomes hard. So, and suddenly somehow things so happened that it just got planned very quickly. So I can't say that it was like long there on bucket list for long, but it just happened. And when things happen, just suddenly it's just they happen.
yeah,
So I had a lot of good time. When then cut off from the whole world, your mobiles don't work. And you are in the mountains. Weather is nice and a very 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 sort of a good experience. Uh, uh, I recommend. I mean, since it's in a list, you must do it.
I will surely one day. Yeah. So why don't you, that's a good segue. Let's know more about Vikas Khemani and your, Carlinian's life journey. You're from a Marwari family. So was this something again you always wanted to do on your own? Tell us more about you.
So yeah, so I come from a very small town. I was born in a very small village called Mandava in Rajasthan, very small town, and where the formative years of education was very very basic. Schooling was very basic. My father was always away from used to live in Bombay for his work, but used to live with my grandfather. So whatever my upbringing happened in that constrained, difficult environment, uh, and always sort of, and my early kind of training, I used to go and help him when most of the school kids used to sort of go play. Uh, when I was 9, 10, 11 years old, I used to go and help him in his shop every day post my school. And by the time I was 12, 13 years old, I used to kind of help him run transport. There was a small transport agency, there was a small gas agency of my uncle. So I kind of go and spend time. That's how I I most of the time my thought process was more around business always. But having come from a very humble background, hardly sort of when I always wanted to do something to do with business. So there's no, but I had no idea. But as the luck would have it, my father migrated to Surat, brought all of us from there, and that's where my real journey started. So, and when I wanted to be part of the capital markets, the bug of the capital markets bit me during Harshad Mehta times. And I'm sure this is true with most of the people
Yeah,
because
yeah,
markets were booming, and I was in
yeah.
college those days. And having lived in a very constrained environment, I have seen my mother suffering from a lot of constraints, and that used to be always my motivation that when I grow up, I'll make sure that these things don't sort of. So idea was to be very frank, to make a lot of money, always from beginning. So Harshad Mehta boom attracted me, and around that, I kind of started dabbling, and of course, I lost a lot of money of my father that time. This was in a difficult time, but but that kind of, I remember in 1993, for my father was not a rich man, so but I lost his kind of couple of lakhs, and it was a very big setback. And that's where I resolved that I need to get this piece right. What is this? Let me understand. And I decided to move to Bombay, did my CA, and that's where my real journey into the capital market started. And I worked a couple of years, with SR, ICICI Securities. And before I really, as you know, that I spent very long time in my career with Edelweiss. So I joined Edelweiss in 2002. uh, I used to get along. I like Ashish as a person, as a sort of leader. So I left an established platform like ISEC and joined Edelweiss, and it was a very small sort of outfit of, I think, probably 20 or 30 people. But from there, my sort of interest into capital market building business took shape. I'm very young, and so you could do anything. You had a lot of enthusiasm, but at the same time, you could work hard and you could also explore and experiment with a lot of things. And fortunately, had a good set of people around. So, that journey ended up shaping me really well, especially from a business building perspective, what it takes. I had to learn everything. I had no formal background. I mean, CA as a course, of course, gives you a lot of technical capabilities, but it does not teach you anything in organization and anything in the HR domain, anything in the business management domain. All you know is, a bit of accounting, auditing, and all. But that also helped me sort of in terms of understanding business nuances, balance sheets, investing. So first 10, 12 years of my 92 to 90, I would say 2003, 4, I was still very novice, didn't understand much. I was trying a lot of things. And 2002, 3 onwards, I think I kind of found a sort of way to get into the business. That time also I was not so much into investing, but more into building businesses. I understood businesses, a building part reasonably well. So that journey started, and along with that, since I was forced to, because of the nature need of the business, build equity research department. What it takes, how it takes to build research, what is research, all those things, bit by bit we worked, and that was an interesting journey. So I had a fantastic 17 years journey with Edelweiss, learning, building several businesses. And that shaped me as a leader, that shaped me as a human being, that shaped me as an investor in more than many ways. Of course, you always have along the journey many failures, lessons, and everything else, but that shaped me really well. And like I said, that coming from a very humble background, always had a dream that I want to build an organization of my own one day. And that's where I left Edelweiss in 2018 and started Carnelian. And and along with few friends of mine who I've known for more than 20 years, and along with my wife Swati, who's also part of the venture. So our idea and sort of dream is we want to build from a next 10, 15 years perspective, a great organization where a lot of people can come and associate. Our clients can benefit from our expertise. A lot of people can be part of this journey, and hopefully 10 years down the line, we look back with a lot of pride and satisfaction that this is what we built. So that is the sort of main motivation. Of course, God has been very, very kind. He has given us much more than what I have ever imagined, deserved, or needed. So that part is taken care. But now the aspiration dream is to kind of build something where you can really take a lot of satisfaction and pride.
No, I think I can completely relate with, and Akshat Mehta has been a segue to many of us into the investing world.
Yes.
So I can relate to that. This is one tweet I really like, and I kind of again relate to that as well. Is that you wrote the desire to perform all the time is usually a barrier to performing over time. It's a nuance which I'm sure when people read it deeply can understand. Why don't you share more perspective on this, especially related to investing?
Yes. So again, like, absolutely, you're right. And this is the one thing which also had a, huge impact on me. And like, we all learn, we evolve, right? If you ask me 15 years ago, I wanted to make money every day. I wanted to win every trade. That's the, and in the process, you create lots of anxiety, lots of mistakes, lots of, uh, you know, other related problems. But, you know, if you know that what is your long-term game, what you want to achieve, if that goal is very clear, there are multiple ways to achieve that, right? And I think whether you take it sports, business, investing, anything you take, I don't think anybody can perform all the time.
Yep.
I mean, even a good sports person, I mean, great players like Sachin Tendulkar also does not score every match, right?
Yeah.
So as long as they see the broader sort of averages and broader outcome, that should be fine. So if we can take this pressure off from us that, oh, I did not do well in last 3 months, if I did not do well in last 6 months or 12 months, I think it can be very, very sort of freeing or relieving. Then you can go and focus back on the basics and saying, am I doing basics right? Sometimes, and not sometimes, many times markets don't give outcome. Either you are early or you are late. If you're early, markets tends to kind of take time to reward. I mean, many investments in my career I have seen for first 2, 3, 4 years nothing happens. Suddenly there's a big jump which happens. Now, if you get worried about your performance in the first 1 or 2 years, 3 years, you will end up giving maybe a 50 bagger or 100 bagger. I mean,
Yeah.
it's quite possible, right? So I think this constant desire to perform quarter on quarter, month on month, year on year is a very big detriment to your long term objectives, and also, in my opinion, your personal well being as well. So that's why it has always been very meaningful. And in fact, I can give a very good analogy of from my base camp trip. This is a one new one I have kind of learned. So in base camp, it's a very high incline, right? You go from 2,800 meters to almost 5,400 meters, right? And there are many steep inclines on the way. And when you look at from down and say you have to go there all the way, it looks very hard. And as you see, there's a term called in Nepali, bistari bistari, meaning slowly, slowly, but
Mm,
continuously. So
mm.
basically, if you just keep focusing on one step at a time and slowly, slowly just go and without how far it is and and you kind of realize that you reached when you look back after a couple of hours saying, oh, you come so far, and that we don't sort of realize. And secondly, you know, if you walk a little fast, you will get tired. So then you have to take a break. So if you do
Mhm.
bistari bistari, you don't have to take break. You can just keep going. But if you walk a little fast, your heart rate will go up, and then you'll have to take a break. And the
Yeah.
time takes the same, but then you are kind of stop. Otherwise, you are going peacefully without worrying about, without putting pressure on your heart. So in some sense, all these things are actually correlated, right?
Yeah. We have life. It's all about how you want to live your life. Let's spend some time on your fund strategy, Colin. Is and I was reading about there is a shift in the strategy as well, where you now foresee a huge shift towards manufacturing and digital opportunities in the India. Again, over the last next 5, 10 years, 15 years, whatever. Uh, let's talk more about that.
So I think that if you see, I mean, you yourself as a very accomplished investor, but if you see, big money is always made when there's a if you catch some big shift happening in
Yep.
any industry in any particular segment, and having identified that shift, you can go and identify good leading players, well, high quality players in that. I think your job is by and large done. So if you see in Carnelian, we try to kind of focus on a couple of such things. A, can we identify what are the big shifts happening, in the marketplace? How can we capture that? How can we capitalize on that? And secondly, we also try to see, what we call as a magic bucket, where where basically is there a gap between market perception and our perception, and are there can be some catalytic moment or change happening around change. If you can get those things right, you can create very very big wealth. So shift is something we focus a lot, and that's where when post pandemic, we found two very big shifts which are going to be decadal in India. uh, uh, you know uh, we thought if we can capture this in a dedicated manner, there could be serious wealth creation happening. One was manufacturing, because as you know, India has been very, very sort of less focused on the manufacturing aspect. Our GDP is only 16% of the total GDP in the manufacturing side, whereas country of this size, you cannot afford to have only this much, because otherwise you're very vulnerable on the which we are from a China side or from all over the world. So government realized, and many events like pandemic, Doklam also helped to accelerate this. So post-pandemic, there's a very big focus which we saw happening, led by government focus, China plus one, India's improved competitiveness, multiple confluence of factors are coming together to propel that fast. So we think that in India's manufacturing GDP can become 3x in next 7, 8, 10 years time. And if that were to happen, there will be massive wealth creation opportunities across various subsegments, and you can identify. Likewise, same thing in technology. In India has been a leader in technology, but but post pandemic, the pace of spending acceleration has got accelerated. Every company needs to spend money on digitization and cloud migration. It is no secret. Now demand is global. Every company in its whichever part of the world, but the supply is only local, supply is only Indian company. So you will see a slow growth sector getting into high growth trajectory, and this shift always creates sort of re-rating as well as the earning growth. So whenever you get both earning growth and valuation re-rating, you make big money. So we try to kind of focus on these kind of things whenever those possibilities are there, and that's where the strategy which you talked about specifically focusing on that. But investing, you can constantly keep on looking for such kind of big shift, because if you get that right, like there's a saying internal in Carnelian, we say, if you if you get if you have a big tailwind, go and park yourself on a right ship, and
Yep.
then it'll take you far. How far, nobody knows, but the
Mm.
tailwind itself will take you very far. And so this is how kind of we think and plan our investments. And it's an exciting journey. You learn every single day something new. There's
Yeah.
nothing. The good part is that when you invest from long-term perspective, it's not that you can ignore short-term. That also you have to kind of keep monitoring, keep seeing whether your hypothesis is true, not true, what's working, what's not working, what's deviating. So all those things have to be done. But when you know a broader trend, then you can be peacefully be part of it.
So maybe we can dwell a little bit deeper into this, right? So a lot of people talk about China plus one, chemical APIs have been a decent beneficiary of that. Maybe you want to talk any particular sector within manufacturing where you see more potential, or you think that's a much more tailwind in that.
So I think, see, that three or four things where India has a natural advantage.
Yeah.
From a chemistry skill perspective, I think India is very well, positioned as compared to most nations in the world. They're well-established chemistry skills. Our engineering skills are very well known. Yeah, they are kind of so wherever these two kind of things are there, India always had advantage, but it did not have ecosystem enabling environment, demand environment, which is changing. So
Mm-hmm.
if you see broadly four segments where textile, auto components, and engineering services and chemicals, where India has historically would had advantage, right? So these are the first sectors where you will see a bit of a tailwind coming and benefiting. More and more are developing. So like consumer electronics, defense. I mean, we have a company which are competing for last 10 years making air conditioners, in country like India, and competing with Chinese players. So we always had capability. It's just that we did not have push and demand environment. Now that is changing. So I see, like in China, there are very very large manufacturing giants, with 5-10 billion dollar market cap of those companies, maybe more. I think in India, I see many of those companies coming about, especially in this, and many segments are developing. So, like for example, China is very big in toy manufacturing, which India is practically non-existent. In my opinion, next 5-7 years, you will see very good ecosystem getting built here, because China is vacating that space, and India is also very good in plastic molding and, some of those related customized manufacturing.
Mm-hmm.
So you will see that building in a big way, in my opinion. And our cost advantage, by the way, is significant. India's labor cost is $200. China's labor cost is $800, right? And power cost is same. Logistics cost are in India, it's getting better. So many such factors. So I think, it's not sort of going to happen in a hurry. But if I were to let us sit back and look 10 years down the line, what can happen? I think what happened in IT probably in mid 90s, you could see similar kind of happening in manufacturing. This will be broad based. IT was very narrow. This will be broad
Mm-hmm.
based across various sectors. It will require investments. So capital goods, again, India is very good at manufacturing capital goods and exporting. But currently, we import more than export. And there, I think machining capabilities are very good in India. Uh, you know, so things are kind of changing. I can see every time I meet a company, you will be surprised to see small companies coming from cities like Rajkot, Surat. You know, you know,
Mm-hmm.
my family live in Surat. 10 years ago, nobody could think that there could be $3 or $4 billion plus companies in chemical space in Surat, but today they are there. And
Yeah.
I- 10 years down the line, you will probably have 8, 10 companies more. So this change, I think we need to take note in India, and this is going to offer massive wealth creation opportunity.
I would agree, and I have seen people when you're in the same locality area, whatever, when they see that this guy has made $1 billion business, I have seen people getting motivated and trying to build that or make it better than that. So I think that competition really works and I would agree with you. Do you classify yourself as a contrarian investor? And if yes, I mean, my view on contrarian investing is that, and I've seen in my investing career is that usually over a long period of time, generally it doesn't work out because you're better off being with the market rather than against the market all the time. I'm saying all the time. Once in a while is okay. How do you classify yourself?
So I don't think, again, like I'm not, I wouldn't call myself or ourselves as contrarian investors. What two ways? One is that I think we try to see, like I said, that big trends. If
Mm-hmm.
even if so, like when we took this big trend against for manufacturing shift, which you're talking about, nobody was believer in that. To the extent people
Mm-hmm.
gave us a lot of push that in India manufacturing can't push. China plus one is not real. Today everybody's talking about. So we've been talking about for 2 years. So what I have seen is that big money is made when in two situations. A, if you can get a very big trend right. Secondly, if you can be a little early, you know. So if you are a little early, then you get them so well that you can ride it out because you're all said and done. Your cost of entry makes a very big impact on your outcome, right? If I buy something at 100 versus 300, the journey of from 100 to 1000 is 10x and 300 is 3x, right? So if you can get that, then you make big money. But you got to be, really, it's not always possible. Secondly, I think big money is made when there's a big difference between your perspective and market's perspective. Many times, market is slightly late to change, recognize the change, or if you can get some early insight. Like I give this example, we see constantly, whether it was manufacturing or IT, in this, but we always see that, let's say there's a company, good business model, there is some catalytic moment is happening, some change is happening around that. If you are convinced, market is not convinced, and if you can kind of do little work and get a better perspective, I think you will come out as a winner. Like we look at every change of CEO in every company. So if as long as we like the business model, my favorite identifying stop is good business model, poor management team, change of management team happens.
Mm-hmm.
And if you like the guy,
Mm-hmm.
if you like the management team, new management team, you can create massive wealth. Like whole Tata Group, according to me, post Mr. Chandrasekhar has come in, is going through
Yep.
that whole big shift. I mean, Tata Group we knew existed forever, right? But
Yeah.
what has happened in last 3, 4 years is unbelievable. When he took over as TCS CEO, TCS was trading at 10 times P, a 50,000 crore market cap, 5,000 crore PAT. In 5 years, PAT became 20,000 crore, market cap became 4 like 40,000. Such a wealth creation in 5 years. ICICI Bank, again a great bank, great franchise, great model. But once Mr. Bakshi took over, we could see that he's talking right language, he's a humble man, he's capable man. But market that time was not ready to believe that this guy can turn it around, or
Mm-hmm.
market was waiting for more validation. We were probably slightly early to believe that this can happen. And that's where your 3x has come in 3 years time, right? So whenever there is a little bit of perspective difference and you can get an edge over that, you make big money. So we kind of keep on looking at now, if that is contrarian, maybe that's a contrarian. But, but we will not do something just because it's cheap, just because it's valuation is not the only driving factor of the investment philosophy.
Okay. But what's been, I mean, you've been investing for last 2+ or decades and all, 20+ years. What's been your best and what's been your worst investments in those years?
So I've had some really good winners, and I have some really many actually bad investments. So I have more many bad investments than good, I would say. But you're lucky that your good ones make up for the bad ones. So again, little bit of you can call it a different perspective kind of investment. I bought a company called KEI Industries in 2012-13 period when the market cap was about 100 odd crores. And my whole perspective was that I mean, I knew them. I was tracking the management for some time, business for some time, but it had like 100 crore market cap, 1500 crore top line, 175 crore EBITDA, and hardly any profit because a lot of money was going to pay interest and all that. And management was very honest in the entire cable industry when it was going through the difficult time. Most people defaulted. This guy did not default. And every cycle he was pivoting the business into something else. So I saw him pivoting the business into consumer cable from an industrial cable. And that part, I think the entire market kept on seeing as a cable company, but he pivoted into consumer cable company. Right now, the same company, and I have stayed through last 10 years or odd years. It's a first 100 bagger in my portfolio. Right, the market cap is now I think 11,000-12,000 crores. But point is that I don't even look at the price because as long as the management is doing right things, they're progressing well. And today also it's equally sort of looking exciting. So, when you can identify something like this, or for that matter, I got the chemical cycle right in 2013-14 period. So when most of the chemical companies are at 500-600 crore market cap, Atul, which was Atul or at 600 crore market cap, SRF 600 crore market cap, Aarti industry 600 crore market cap. So my hypothesis that time was that China is rebalancing the economy. They are taking labor cost higher. Some sectors where they dump into India might do well. And with that hypothesis, we started exploring and found some of the fantastic companies at a dirt cheap valuation. And they were guiding that we will grow at 15-20% with potential 5-6% dividend yield. So, we said you can't go wrong in this. And I have stayed through, like probably Aarti is in my portfolio. Since then, I have not sold a single share and it's been probably 70-80x. Right.
Wow.
So like this, so big money again, like you get a big trend and get the right guy and then sit tight, do nothing. So that's how it works. So mistake side, again, lots of them again, especially with the biggest mistake you make is, when you bet on a company because it is cheap or you bet on a company where management is dodgy. I have seen wherever I have got, greedy in a shorter term ki thoda paisa bana lete hain because abhi short term mein trigger hai, usme you end up giving money only. So, whenever I have anything on borrowed conviction, on somebody else's conviction, it has usually been a bad outcome. So, we kind of keep on. So I have had situation where I mean, whatever my basket of 92 stocks, I still have those trophy shares in my portfolio. I have physical copies and which are worth nothing now. Just to keep reminding me of my mistakes from past. Every cycle you make mistakes, and those are there in your portfolio. You don't sell them to keep reminding you that this is what your mistakes are. So I have had I have betted on company with. I mean, I don't want to name them because they are dodgy. Some of the dodgy promoters and whenever there's so from there I created a framework that what we call type A risk, type B risk, and type C. Type A risk is a total loss of a capital. That happens only from two broad situations. Either you bet on inferior quality of the management or you bet on a business which is prone to disruption. Whenever if you see these two, combination of these two is there, you will have a potential loss of capital situation. If you can avoid this by and large, you will never lose your capital. You may not make money sometimes, but you will never lose your capital, right? So we've created a framework using all these experiences that what you I have had some 8-10 stocks in my portfolio where I have lost almost close to 80-100% of my entire investment. So those things always keep reminding you. You still make new mistakes, but at least you keep reminding you that you need to avoid these total loss of capital candidates, and that's how, and over the period of time, in a bull market, your portfolio quality deteriorates. So you have to kind of constantly, because new concept, new ideas come, and
Yeah, yeah.
you constantly keep on sort of fighting against that. Uh, there are lots of things one can go about it, but broadly speaking, I try to sort of avoid crook management, because that is where the biggest risk lies.
Tell me, this always fascinates me. What is the worst? Is buying a wrong company or selling a good company early?
Actually, very, very deep question, to be very frank. Of course, buying a wrong company for sure
Yeah, yeah.
because buying a wrong company is definitely not a good idea. But this, you don't get that a good company, how long you should ride. This
Yeah.
is the one thing which you know one struggles. I remember I bought a company called Ajanta Pharma at
Mm-hmm.
300 crore market cap.
Mm.
Okay, and very, very bullish. And by the time it reached 1,000 crore market cap, I sold it.
Yep, 3x.
3x
Right?
return. What else you want? Right?
Yeah.
Today, market cap of the company is 20,000 crores.
Wow. Yeah.
So,
That's I always struggle with that actually. Yeah.
and it happened that one friend of mine said, "Nahi, this company does some adjustment," some flippery comment he made. And based on that, I said, "Oh, 3 paisa ban gaya hai. Abhi pata nahi hai kya hone wala, please do." So, there's no right or wrong answer on that. But idea is that actually, if you can ride your investments for long, like, I mean, any accomplished investor, whether it is Mr. Junwala, who makes large part of those money from things like Titan, right? Which is he has held on for long. It requires a lot of conviction to hold on for that long, right? To hold on to a 100 bagger, 200 bagger, the temptation to take money off the table is very high, because
Yeah.
we all tend to want to take our profits very high, and we always want to push our losses away. That's a bias as a human being we have, right? Loss aversion bias.
Yeah.
So, but it should be other way around, right? You should cut your losses fast and ride your wins.
Yeah. Yeah.
Right?
I agree
There's
with
no
you.
science to it. There's no science.
Yeah.
It's a very gut and art kind of thing, right?
Yeah. Let's talk about financials, right? I mean, market has always been very heavy. Index itself has got a decent allocation to the financials and IT, right? And financials have underperformed in the last couple of years. Some people say it's because the FIs have been selling, and of course, they will sell what the heavy weighters are, which is financials and IT. What do you think of the financial market? Because see, India can't do well if the financials don't do well.
Absolutely. So I am very, very bullish on financials. There's no question on my mind. Like you rightly said, that no economy can grow without financials, right? It is a bloodline of any economy. And fortunately, two big things have happened. We must kind of realize, you know, these days there's a narrative being built that fintechs will disrupt banks. It doesn't happen. It can't happen, rather.
No.
Every bank is gearing up. A, it is regulated industry. Secondly, banks are also gearing up on the technology front. And in banks, according to me, between money and technology, money is more important. Technology can be built, but money building liability side franchise is a very, very tough and difficult thing, and brand building and all those things. So most of these banks who have a very good liability franchise will do well. Credit growth is about to pick, or it is picking up. Rather, last 2-3 quarters, we are already seeing acceleration happening. I think one big thing, in my opinion, market is making a hypothesis margin will get squeezed. But I think that's fine, because one very big change, or two very big things which has happened in Indian banking sector, which one should look at with that perspective. See, every time we see India has had a huge credit cost, right, in multi-past cycles. This time around, India is very different on the banking sector. See, we saw 2008 period, very big, huge retail NPA in our entire banking system post that crisis. But that time we did not have CIBIL scorecard. We did not have that whole infrastructure. Then second credit cycle we saw was 2012 to 14 period in the corporate cycle. That time we did not have IBC as an infrastructure, right? So, we did not have that enabling infrastructure for credit or preventing credit losses. See, India is fine, or any banking system is fine to manage the business cyclicity related credit costs. But what happened in 2009 to 14, those kind of things are difficult. So now we have a very, very solid enabling infrastructure for credit assessment. We have a data for, using, giving credit. So which all those things were not there. So according to me today, even banking system is finally pricing some of the credit. It's also because the credit cost is coming down, the ability to price that has gone up. So according to me, I am very, very bullish on banking sector. In my opinion, next 2, 3 years, we are one of the golden period for banking, financial services as a sector. And as the per capita income of the country grows, there's no doubt in my mind that we will be saving more, given the way our society is, and the savings has to be channelized. It could be only through banks, mutual fund, and insurance. There's no fourth way. So it has to come through this funnel or pipe, and this pipe is going to kind of clean this, create. And as the size becomes bigger, the operating leverage, the opportunity size, and everything will become bigger. So I'm very, very, very bullish.
So last time we met, you had a very strong and great thesis on Reliance. So let's hear your thoughts for our audience as well. Tell us more about your thesis on the overall Reliance Industries.
So I mean, Raj, I feel that Reliance, and especially, I'm a very big fan of Mukesh Ambani. I think he is one of the, in my opinion, least celebrated business leaders globally. I think it has changed a little bit recently, but still a lot of people see Reliance with skepticism than actually with pride. And I think we should see that with pride, because they have created so many world-class assets, which has transformed India and India's lives of India's people, which we don't kind of see. One is, of course, if anybody taking a risk and building business, nothing wrong with it. I think first they started with the refinery, which is again global scale capacity, producing the or processing the crudest, high sulfur content, dirtiest crude, and kind of make big money and having high margins and all. So that was there. But what they've done with Geo, when Mr. Ambani put that, he started with putting 1 lakh crore on table, and then started this venture. It's not that, and in his first avatar also, he disrupted when we were paying 16 rupees a minute. He brought it down to 1 rupee. That revolution, according to me, gave access to Aam Aadmi in India, access to the mobile phone. Before that, it was not possible. When the second phase of Geo happened, the data became like, commodity, and every, person on the street could access data, which was not the case if they did not bring this disruption, right? So putting on table 1 lakh crore, taking that kind of bet, which by any global standard is a very aggressive bet, to have conviction into that and make it work. In my opinion, India would not be same India in pandemic if we did not have Geo platform working, right?
Agree. Yeah.
So we underestimate the impact it has made to the Indian economy, common lives of the people. So I see they've been, and same thing they're trying to do in retail, where bringing product at a right cost to the customer. And one thing I'm very excited about, if you see, when Mr. Ambani announced on hydrogen, and when he speaks, I believe that he's never a flippant talker. He talks with a lot of credibility. He does more, talks less. On hydrogen, his vision is to make India self-reliant on energy, and not only that, in fact, to make India exporter of the energy. Now, as we know,
that's big.
That's very
big,
big, right? Now, it can happen in 5 years, 10 years, 3 years. I have no idea. But the fact that he's already put a lot of money on table to sort of embark on that journey. Can you imagine, if India becomes self-sufficient on energy, what can happen to us? Wow. I mean, just think about it. That's our biggest weakness, right? That's where India has always been weak. If you can address that, now the way, if I were to just look at this from this lens, according to me, Mukesh Ambani is a national asset. We should all pray for his long health and long age, and say that it changes India, right?
Yeah.
So I think he's the one entrepreneur who was innovation driven business model. They always challenge the established notion that why it should be 16 rupees a minute, why data should be sold per KB, why it should not be sold in a MB, why we should not put world's largest refining capacity. So they have always questioned status quo and dreamed big and transformed India at a different level. So I am very, very bullish. And I think if one company which has a shot at becoming a $1 trillion market cap, I think it would be probably Reliance.
Wow, that's a big one. You are into poker and big poker player, I must say. In poker, very interestingly, you need to know when to fold your hand or when to go all in, right? I mean, both sides are very important. How, what kind of lessons one can take from and learn from poker? And I think one thing pandemic has made India learn, whole India learn is poker. I think every family now plays poker all over India. I've seen in my hometown, Bhilai, everywhere.
Yes.
So what lessons one can learn from poker and apply into investing?
So I think, both, there are lots of lessons. I think, when you poker, when I got introduced to poker about 12, 13 years ago, it
Mhm.
fascinated me that there's an element of risk reward in that, there's an element of psychology in that, there's an element of marketplace in that you are playing with unknown players, and how do you figure that out. So all of those were there, and like you said, it teaches you discipline, it teaches you risk reward. Very important. And when you start playing that, you just go and play every hand, right? What in poker terminology called fish, that you play every
Mm.
hand because you think you are playing based on the hope rather than
Mm.
cards in your hand, and what possibilities are there. And as you grow in the game, you realize that lesser game hands you play, better off you are. And
Yeah.
how you kind of constantly, and same thing is in investing, right? That you don't have to buy every stock, or you don't have to lesser sort of ideas you have, better it is. You are more rigorous. Like as Warren Buffett says, that you have only 20 punch holes in the punch card, and you can kind of punch only one at a time. So actually, less is more. That is what is true in poker. That is true in investing as well. Secondly, I think discipline. That when you know that in poker many times you have a full house in your hand, right? Or you have a very good card. But it's also important to know what your opponent can have, right? Based on his betting pattern, based on. So you need to understand that, right? Even if you cannot fall in love with your cards, the moment you fall
Mm.
in love with your cards, you will end up. And if you ignore what's happening around or what's there on the table, sometimes even if you have very strong cards, somebody might be bluffing, but he's just a big stake guy and he can wipe you out. you know Many times, even if you're good hand, you fold, right? Because
Mm.
you don't have a risk appetite, or you don't have. So again, the same thing, I can relate to that. Market can remain irrational longer than you can remain solvent. So same
Solvent.
way,
Yeah.
you got to manage your risk. And even if you have a good card, sometimes it's good to kind of get out of the game and fold, because that's not your day, your game, your risk reward. So that's another thing which I think, and even if you have a great hand, somebody else can have a better hand. So
Mm.
you cannot fall in love with your and when you know that you are in the game, you are in charge. That time you should be ready to take risk. So if you get a good idea, multi-bagger idea, then you can't, then you play with the, let's say, 2%
Mm.
of your portfolio size, then you aren't
Mm.
making it big, right? That time you have to have, let's say, either all in poker terminology, or you can say I will have a size bet. So bet size becomes very important. So when you see that all the kind of things are right, you kind of take it a very big bet, and that is what at least poker gave me. Earlier, I used to, even if I like something, I would only take a small portion. But now my ability to take outsized bet on a particular company, if I am convinced on that, on your conviction, has changed.
Mm.
So these are some of the things I try to sort of learn from poker, but it's a constant learning process. Never say that. This is what, but these are some of the commonalities always found and appreciated in both things.
Yeah. So we spoke about some of the manufacturing sector. We spoke about the financials. Let's talk about digital a little bit, right? I mean, we've in a lot of these companies are actually not listed, and now we're starting to see some of them getting listed. Not a great start to the whole thing. I mean, we've seen them going up and coming down. Still, while a lot of people say, like a Zomato, maybe good business, Nike is a good business, but good business at what value, right? I think that's an important question for people who are involved in investing, right? Because we are actually looking for the shareholder return. How do you see some of those companies in terms of the valuations?
So I think that's, I've been very, very vociferous in saying that I could see practically a scam happening here. Every company, every you cannot double the valuation of the company every 6 months just because somebody else puts money at higher price,
Mm.
right? So that's clearly a very big scam, Ponzi scheme, or euphoria, whatever you want to call it, has happened. And I think unfortunately, retail has also paid a price for that. I think at the peak of the euphoria, all those companies went public. And
Mhm.
if I've been on record saying that many of those companies may not exist in 5-10 years down the line. I've
Mm.
seen as a banker in my part of my the previous experience, right? I compared to similar to what happened in 2000. If you remember, in 2000, many companies got valued based on eyeballs, and
Yeah.
right now, if you go back and check, internet based, those models were coming about. there was not, I think internet as a technology was great.
Mm.
There was no doubt on that, you know, but the way it was being played out that time in that cycle was wrong. And hence you see massive wealth destruction happen. Same way I feel, I mean, after that burst of internet, then Googles and all those things came out in 5 6 years later, using the same internet as a platform, but in a very different avatar and very different business models. Yahoo did not exist.
Yeah.
What was the darling that point do not exist now. So same way, I think digital is here to stay. Digital is a very, 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 because that's how the world is going to transform. All of us will have more and more of our digital in our lives in times to come, but not in this form and shape. And that, digital is just a medium, right? So if the basics of, just because it's a new medium does not mean that you will pay crazy valuation. So basics of investing, of cash flow, sustainability, competitive intensity cannot go away. Many companies today which has got listed don't have any business model according, why they are valued the way they are. They don't have business model, they and I don't want to name them, but I think so the way we look at is companies where there's a business model, moat, something interesting is there, and as long as the right valuation, right, we will look at it. We are happy to pay, don't be mistaken, we are happy to pay higher valuation for high growth. That is not a problem. But just because you are burning money, I mean, look at, I mean, Zomato is a company which came public, right? It's a great business model, high emote. Once, I mean, I run a restaurant business also. I mean, we pay 20% to them, right? And we have no choice but to pay them, right? It means they have a moat. But the point is, after paying 20% from me and take from customer, you take charges of delivery of 30 40 per order, which is about almost 10 15%, and still you lose 2,000 crore rupees, then I guess there's something wrong. And at the market leadership, right? So then what stage you will make money? So either something is wrong in the cost structure or something is wrong in the competitive intensity, and those have to settle down before you start making money, according to me. So like this, we keep on analyzing every business model, but the analytical part of the business model does not change. वो चाहे आप माल digitally बेच रहे हो कि दुकान में बैठ
I mean, ultimately business, right? You have to do, you have to, I mean, sell, either you're selling your product, you're selling a service, and you make money, trying to make money out of that, right? So that cannot change.
As simple as that, can you generate, more return on your capital than higher cost of capital over a long period of time? It is as simple as that. Whatever you are doing, whether you are selling online, you're making chemicals. Today, what's happening in chemicals, just because chemical is a big opportunity, companies are trading at 50 times EBITDA. Doesn't make sense.
Yeah, agree.
These kind of pockets get built every market cycle, unfortunately, but that's a market.
Yeah. While we have spoken about many industries where you think there is a lot of potential, what are some of the industries, or I mean, if you want to talk about stocks, which somebody can avoid? I mean, as a long-term thing, not as a short-term trade.
In investing, there is never say no, because ultimately risk reward can always changing. But generally speaking, current market, I guess, in my opinion, commodities are overdone. You will see some bit of a pain definitely coming through. So I think that I would avoid. Anything which was dependent on the consistent raising of the capital is something which we are very, very wary of as thumb rule. And as a contrary to that, anything which does not need capital to grow should be always looked for, right? I mean, broadly. So I always kind of say, this company में grow करने के लिए उसको पैसा ही raise करते रहना फायदा क्या उसका? मतलब then you will constantly be kind of in that mode. So to that extent, I think we avoid those kind of things and commodity kind of players. And lastly, जहाँ पे management, like we spoke earlier also, that and if you think that something is going to get disrupted, or potential disruption, stay away from that. You don't have to be part of that.
So which do you want to pick any particular industry or any particular one?
So like I think automobiles, lots of we don't know whether hydrogen will play out, EV will play out, whether incumbents will win, whether new players will come, right? Or fluid situation. So then you kind of be careful of that sector, that you might play as a tactical trade for a cyclical recovery. That's a different thing. But you can't look at that from a structural perspective unless you know that unless you get idea that this guy is going to be part of the winners. He will deliver this. So disruption side, I think constantly you have to sort of worry about it, and that's a very hard part. because many times it hits you only when it hits you. You don't even realize. So that's a constant. But my general rule of thumb is that if you have if and but stay away now, because there are a lot of other. We have to
Yeah,
at
the
that moment buy
opportunity.
15, 20 stocks. You don't have to buy everything.
Yeah, I agree. So let's move away from investing to the personal side of yours and some thoughts and beliefs as well. Our show is called Breaking Investment Stereotypes. We all have beliefs and stereotypes in our image and in our mind, and which we all at some point in time we leave that away. What are the any two strong beliefs you had in your early part of your career, which you realized that it doesn't make sense, and or any stereotypes you want to talk about which you've broken?
So earlier, like I always say, coming from a Marwadi background, which is a very good
Mm-hmm.
thing. But one thing we
Mm,
all as a Marwadis are taught to be very stingy and conjuice and buy things cheap, right?
mm,
That's
mm,
ingrained in our DNA, right? Anything which is
mm,
cheap excites you. So if
mm,
I go for a shop and there's a counter which where there's a sale going on with a 40% tag, I naturally get
mm,
attracted towards that, right?
mm,
So earlier also my style was that to be very comfortable with buying cheap stuff and get
mm.
to realize over a period of time there is something cheap because there's reason to it. So
Yeah,
just don't evaluate because it is cheap, right?
yeah. So I
So
say that cheap always get cheaper.
yeah, yeah, absolutely. So
Yeah.
that part at least I have kind of to some extent still your DNA don't change very fast. Still
Mm,
you get attracted, but that it's okay to pay good price, fair price to a good business rather than buying a cheap business, right? And that journey I think I am still so kind of on it. Still many times when something comes very attractive, "तो इससे क्या खराब होगा? सस्ता है, ले लो." That still at times comes around, but point is that at least now you see that is there a catalyst to change? Is there a reason for? Is there a perception gap between your perception and market perceptions kind of stuff?
mm,
So that you do. I think that is. And secondly, earlier I was not paying as much attention to quality of the management. Actually, it's a cliche term, but I can ultimately the determining factor is only management in the
oh,
same
okay.
industry you know
Mm,
uh, so you got to pay a lot of attention to that. In 2012-13 I identified, like I was saying, chemical as a basket. So there were
mm,
5 companies I met or liked met, and one company I won't name, but one company, uh, their market cap was 400 crore in 2012. Every
mm,
company more than 400 crore, 600 crore market cap, and in that company corporate structure, governance structure was so poor.
mm,
After 10 years, when most other companies have gone to market cap of anywhere between 15 to 25,000, that company is still at 1,000 crore market cap.
mm,
Same industry, same everything, but
mm,
management structure was wrong, management intent was
mm,
wrong. So point
mm.
I'm saying that ultimate earlier I was ready to ignore that factor. Now I am kind of very finicky about or very importantly focused on management parts. These two changes at least I think 10 years ago and today in my mind is are different.
Okay, awesome. We know that you are a big proponent of fitness, sports, yoga. I've seen you doing yoga, badminton, same day, same time. You've done now, Everest Base Camp. And we are also seeing generally health issues among young professionals, right? I mean, and partly maybe because of COVID as well of late. Uh, how tell us the best practices, about how one should incorporate all of this into their hectic day-to-day life.
So Raj, I think this also partly comes with age. I think as you start, of
Mm,
course, one is your internal setup. Secondly, also comes with age. I think most youngsters in the initial part, and I was also focused a lot on career, money, all those things, right? Fortunately, early on in my life, I realized that health and fitness is very very important, and it has also bearing on your everything else. If you're physically unwell, physically not fit, your everything else will get impacted, whether it is your profession or personal life or your married life or for whatever. So I always
mm.
wanted. I've been running marathons for 15 years. I've encouraged people when I was in Edelweiss. I used to tell people, I so enroll a lot of people for marathons. Encourage people, do whatever. It does not matter.
Was Russia? I think Russia also runs a lot, right? Was
Yes,
he a
yes.
big influence on you, or you are is other way around?
So what we did first time when in Stanchart Marathon happened, I
Uh,
enrolled 7, 8 of us.
okay.
I just enrolled and said I'm running, and we did that dream run of 7 kilometers, which was so hard
Oh.
that point in time.
Yeah.
So
Yeah.
fortunately, Rashesh has been again a very, a
Uh,
fitness. So he agreed. Vidya came, Venkat came. So that's how we started a marathon first time.
mm,
Uh, you know,
mm,
uh, But you run marathon, you do yoga, I mean, and another change which has happened in me, at least over the last 10, 15 years, I've moved away from material world, or I have started getting attracted towards spiritual world. So,
Mm,
I'm exploring a lot more of those dimensions. So the best thing is if you can get your body, mind, and spirit aligned, right?
mm,
Unfortunately, in the materialistic world, I think spirituality completely gets ignored. And if
mm,
you, there's a very big, sort of talmel in all these things, right? You have
mm,
to have emotional well-being, you have to have physical well-being, and so to balance this out, in my opinion, you always have to have some physical fitness program and as well as the mental fitness program. And yoga is one which I think, in some sense, cuts across between both physical and mental. But if you have to take the mental fitness program higher, then you have to also go into meditation. So I did this
mm.
10-day course in Vipassana, which is strongly recommended to anybody.
Yeah.
It's one of the most transforming experience one can have. It
When
is.
was that? When was that? When did you do that?
I've done twice. So I started
Okay.
first. I did in 2013, and one I did last year.
Okay.
So uh, and it's very very. So it just puts you on a very different journey.
Mm.
Now start exploring what is life, what's the meaning of that, why we are doing what we are doing. Otherwise, we are just doing. We start working, chase
Yeah.
money, and keep
Yeah.
chasing money through our life.
Yeah.
But don't realize why we are doing what we are doing, because we all also know that we are going to leave everything behind here,
Yeah.
right?
I have a good line on that, and I've read it, not original, right? I've read somewhere that the amount of money you leave in your bank balance when you die is the amount of extra work you've done.
Yeah,
Yeah,
absolutely, absolutely.
yeah.
So,
So let's talk about the spiritual part, because that also, where my interest lies as well. So apart from Vipassana, what do you how what do you do to make sure that you're there on that path? Because while I can see that people can get into fitness because you can get a coach, you can get somebody can at least ring a bell and tell you come down, get to the gym or do some yoga. Spiritual is something you have to do on your own most of the time. How do you make sure you're on that track and you do that more regularly?
so again, I mean, fortunately, our society has lots of such things. So one is, I think you can get on a group or plan. So let's say
Mm,
if you're part of Vipassana, you can become part of the group. Secondly, I
mm,
strongly recommend. I mean, I read a lot, especially
mm,
now. I kind of consistently read something or other on spirituality. Anything which I
mm,
lay my hands on. So, like, I have this book, which is, in my opinion, one of the most fascinating book I've read some 3 4 times, and I still keep reading. Uh, this is a book on Gita, lectures on Gita by Vinoba Bhave.
okay.
It's my opinion, it's one of the most simplest commentary on Gita, easiest
Mm,
to read, but very, very deep and meaningful. Any common
mm,
man can relate to it and make an
mm,
impact in life, right? And
mm,
secondly, when you go to programs like Vipassana, they are not religious. People kind of, and many times, make it like
mm,
a sectarian kind of programs, but they're not.
mm,
They actually very scientifically developed programs by Gautam the
mm,
Buddha 2,500 years
mm,
ago, with lots of techniques as well as the philosophies inbuilt into it.
mm,
It's like this. One thing which I learned from Vipassana is that there are only sort of broadly two ways of progressing on the on the path of Dhamma, which is the
mm,
righteousness. Dhamma is not Dharma, but righteousness,
mm,
not religion, righteousness, right? So basically everything works as per the law of nature. But if the only two barometers that you know whether you are progressing on the path of Dhamma is, one is that whether you have done something for others without any of your self-interest more than yesterday, it means you are
mm,
progressing. So if
mm,
you just get this one philosophy, right, that we need to do something selflessly for others without anything else, it means you are progressing. It's such a simple philosophy, and if you can just see that, eh, honestly, if you ask it, आज मैंने क्या किया दूसरों के लिए, you will realize we don't do anything for others. You know,
true.
did I help? I could have helped my housemates. That's fine, whatever I'm saying, but we don't do anything for others.
Yeah. Charity begins at home first, right? You should always try and help people around you.
So anywhere, what I'm saying is
Yeah.
it's such a small philosophy. So
Mm,
like I kind of try to kind of say, reflect every day that did I do something for without anything being in it for me.
mm,
See, we all do everything for something there is my interest,
yeah.
but
Yeah.
without anything being in it for me, did I do something? It's
Yeah.
such a powerful philosophy. If you get this one line right, you will start progressing the dharma, a path of spirituality, right? So there are various ways of doing it, and I strongly encourage people to explore this dimension. It has been a game changing and life changing for me. I feel lot more at ease, lot more myself, lot more, happy with all these things. Other than, I mean, when I left Edelweiss, I was more on a materialistic path that मेरे को ये करना है, वो करना है. I mean, all those things have gone away. Of course, you still want to work hard. You want to be karma yogi. You don't want to be, sitting and idle because you have enough. Does not mean that you don't do anything.
Yeah.
But not with that motivation, desire. Your motivation, desire makes a big difference.
Yeah. So you mentioned one book, Vinoba Bhave, commentary on Gita. Any other books you want to recommend? I mean, not just on spirituality generally as well, since you read a lot.
So I think there are lots of book depends on what kind of subjects. I actually lay my hand on every practical, any book and every book I can read. Trust me on that. Recently on investing, this book on compounding by Gautam Baid is a very good book.
Yeah, Gautam Baid is great. Yeah.
Vishal Khandelwal wrote. I mean, anything. I'm a big. I have read some 5 times. Poor Charlie's Almanac. I haven't found anybody as wise as him. On various aspects of life. You just keep reading, and every time you read, you find something new. So there are, many books which one can kind of keep on reading on investing life. So I pick up anything and everything, and read because कुछ ना किसी से मिल ही जाता है.
Your own money. Do you? How do you take care of your own investments? Your personal investments. What do you do? Is it everything in equity? Is it all in your fund? What do you do with that?
I'm a big India believer, and I am like almost close to 100% on equities. I just have a small property which is rented, yielding, which takes care of my life expenses. So if something equity was to sort of do not well, my lifestyle will not get impacted. To that extent, I think I have, you can call it yielding real estate as an investment. But other than that, I don't have any fixed income. I don't have any fixed deposit. I'm largely equity because I believe that and my lifestyle is very simple, so I don't need a lot of money, to be very frank. So it's just compounding it. So I'm largely buying good quality business, good companies. Sometimes some risky bets you take, but you kind of balance out your portfolio. I still believe that many small companies will become very big in India. That whole I'm still looking for those 100 baggers in my what kind of potential 100 baggers in a portfolio, right? So you keep trying and experimenting. In your personal investing, you can take a lot more risk than a third party money, which is always the case because you don't have to explain if something were to go wrong. So to that extent, the style changes, but otherwise philosophies don't change.
So you've done investing, you've been into fitness, you've been into spiritual world. Any regrets in your life or anything? I mean, so one is regret and one is for next whatever 10, 20, 30 years of active life. What is something you're looking forward to? So let's talk about both sides.
Yes. So I mean, I can tell you, Raj, honestly speaking, if you asked me this question 3 years ago, I would have counted many regrets. But today, I mean, with a new perspective, I feel that life has given me much more than I ever deserved, needed, anything. I mean, where I was as a kid and where am I today? I think life has been very, very kind, and God has given much more than that. So I don't have any particular regret. The only thing which I probably can say that I wish I embarked on my spiritual journey slightly earlier in my life. I mean, again, there's always time and place for everything. So, but if I kind of got that perspective, I would have been a lot more happier as a person maybe 10 years ago than what I am today. And it's a continuous process, by the way. So I'm not saying that I'm perfect. It's a continuous, but at least I know that I'm on a path, and that path will take you somewhere, right? So, and that also probably answers or leads to the next 10, 15, 20 years. I want to be basically a happy human being, influencing people, impacting people, helping people, right? Wherever you touch upon, if even this conversation can make one person, help in one person embarking on this journey, learn something from me, I'll be very, very sort of helpful. So I think idea is to just move away from self to others. I think, and that's how our ancient scriptures, everything has taught us, but we don't realize, we don't value that the world is not only around you. World is actually, what you do for others and what you do for wider, and eventually your interest also gets served. It's not that, if you do things for others, things don't get served. It does, but the perspective is different. What is the starting point? So I want to kind of in the next 10, 20, 30 years, walk on that path, evolve myself spiritually much more than what I am today, and explore new dimensions of life on that.
Awesome. This is one question. So we're coming to the last part of our conversation. This is one question we ask everybody. What is one advice you will give to your 20-year-old self?
Same thing, like I said, that money is not important, which many people say that, you can say because you got that money, but actually, I would advise everybody to read Gita, not once time, twice, thrice, 10 times till the time you understand that. Because I think I don't think I have found any scripture, any document, any philosophy better than that, which has so many answers to every problem of your life at every stage of your life. So I would say that don't think Gita is for somebody who's 40, 50, 60 years old. Gita is as relevant for a 15-year-old child to a 20-year-old to 30-year-old. And, I wish I got introduced to that early on. And actually, my father always used to tell me though, but I never kind of, did it. So I would say that, you know, if you are young, don't see only materialistic world as the one part of your life. Start building that. Focus on money. It is important. I'm not saying that because life, comfort, everything is very important. So I do not make mistake that I am saying that money is not important. Of course, it is important. Must earn, because no person can be spiritual on hungry stomach. Let's get it right. So to walk on the spirituality path, वो कहते हैं ना कि भूखे पेट भजन ना हो गोपाला. So so you have to have basic comforts and everything, but money can't be everything around. And that balance, if you see, you can lead a very, very balanced and beautiful life. Life is very beautiful. I mean, we have so many things working for us as a human beings. Life is very beautiful, provided we know how to live it.
Awesome. On that very good note, we come to end of our conversation. So thank you, Vikas. Thanks for coming on our show. Really appreciate it. Thank you so much.
Thank you very much, Raj, for touching upon so many topics in such short period of time. I hope I've been interesting and meaningful for you and your audience. So, but look forward.
I'm pretty sure. Thank you so much.
Thank you.